Looking for the sports channel, Gab.
Alrighty, welcome back to Weenie Trades in 2021. So this will be the first game plan of 2021. If you remember back in 2020, the game plans averaged about 70 to 80% accuracy for profit from the entry price back in 2020. So let's go over a few of our highlights from 2020 just for nostalgic purposes and to see some validity of these game plans. So last year we said you could go long on NEO just over $15 a share. I do say that you can take profits whenever you want. However, I do give some general areas of resistance. We said about $20 a share, which there was some resistance, but then we, broke out. But NEO from 15, netted you about 280%. So that was last year. NEO. And then Roku last year, we said over 150. We said to at least target $200 a share. Well, boy, Roku really did the deal. I mean, from 150 to 200, that's 31%. And then, boy, if you had held the shares like we did over here at Weenie Trades, boom, 140% on Roku. Last year, we said to go long on Nike, just over 105. Boom, nice good move, 37% to all-time highs, just massive moves all around. Spotify last year, we said to go long over 270. Spotify went as high as 346, 27%. We took profits at about $320 a share. Last year, we said to go long on Microsoft over 210, add over 215. Microsoft went as high as 232. Stick with Microsoft, by the way, not financial advice. Beyond, we said to, go long over, what did we say to go long on? 128, so from 128, we said to target around the $200 a share level. Boom, that's a 53% return. Peloton was a really explosive mover last year. We said to go long on Peloton over $70 a share, targeting about the 120 level. We were adding over $100 a share. Boom, that's 71% return. If you had the guts to hold the shares, you could have dip bought again at 100 and, you get a really good return, another 70%. But Peloton, nice highs of 167. So it was Peloton last year. Tesla, we were long since 420, mostly because it was a hysterically funny price to go long at, but it was also a technical level. But Tesla, 69%. And SQ, we said to go long on SQ from 130 last year, and boy, SQ has just been a beast, going as high as 243. That's 83% return. Last year you said to go long on Target over 120 area, so from Target 120, this is a nice little consolidation zone. Boom, Target 43% return. Palantir Palantir, we said to go long from 16 on PLTR, and from 16, Palantir went up to 33. That's 108% return. And then lastly, Upwork, UPWK, we said to dip buy Upwork after it was made a nice good push up. Back tested 25, the old all-time high slash just above the pre-IPO price. So it's from 25, Upwork went as high as 41, so that's a nice good 62% return. So that was just a little taster of last year's game plan. So let's keep an eye out for this year, but there's a ton of other stocks that really had good moves, just not as high as some of the ones that we highlighted right here. So now that we talked about the highlights of 2020, let's go over what happened last week in last week's game plan. So last week we said to go long on Microsoft over 225, targeting about the 227.50 area. Well, boy, Microsoft did the deal. Microsoft over 225, went as high as 227.40, so did the deal for a small partial, didn't give the explosive move up to 230. Stick with Microsoft. It almost made this week's game plan, but it might need a little bit more consolidation to do. But Microsoft, look for it to still pop those all-time highs, especially if it can break 230 on nice, good volume. Last week, we said to go long on Apple, AAPL, over 133.50. And boy, that was like the low of day after this explosive move. So from 133.50, nice, good 4% move, 3.5% move, all the way up through all-time highs to 138.79. Sticking with Apple, we can actually go long on Apple over 133.50 this week again. So look for that continuation on Apple this week. Last week, we said to go long on SQ if it comes into 220 at a nice good dip buy. So SQ came into 220, and it doesn't show it on the daily chart, but if we go to the 30-minute chart, SQ from 220 went as high as 228.88. We set a target about the 229 level, so that was a nice good 3.8% from the entry. You only had to tolerate about 40 cents of downside if you took the dip buy right at 220. So that was SQ last week. Last week we said to go long on Disney over 174.50, and boom, Disney from 174.50 just made a nice good move up to all-time highs 183.40. Nice good 3.6% yet again. And last week we said to go long on Palantir over 29 and over 30, and that actually never triggered. Palantir just gapped down, went as high as 28.50, but then just sold off. So we never came into Palantir. So if there's a no trigger, be sure to not take the trade, because that's the level where those sellers should be taken out and we should pop upside. If we never get to that level, then the sellers have nothing to worry about and the stock moves downside. In this week's game plan, we're looking to go long on Spotify. If we can get a nice good dip into the $300 a share range and then get a nice good bounce, it's a whole zone. So the range is from 300 all the way to 295. So it's a pretty wide range. So be sure to share size appropriately, contract size appropriately. Maybe you use some vertical spreads, debit spreads. If you want to do some naked calls, make sure you got a really good entry. But Spotify, we're looking to go long on the dip buy. So we're looking for the dip instead of the breakout. Last year, Spotify was a really good breakout, and it should have some good momentum, especially since they're getting involved in the crypto space and a lot more. It's definitely a leader in its space. Similar to Spotify, we're also looking for a dip buy on Chewy. Chewy had a nice good move up, and now we're selling off ever so slightly, actually pretty nicely, 22% from the highs. We're looking for a dip buy on Chewy. If you want a little bit of an earlier dip buy, 86 is your level, but I'm looking to dip buy around the 85 as low as 83 on Chewy. So stop is going to have to be around 82, 82.50. Depends on how tight of a stop that you want, but we're looking for a dip buy and a bounce, looking to target something about the $90 a share level from that bounce and from that dip buy. NIO just reported the delivery numbers, and I believe they beat by over 20,000 vehicles. So NIO, that's some really bullish news. We'll see if NIO gaps up on Monday. But if not, we're looking to go long over $50 a share and targeting about the $52 a share level for an early partial, but maybe as high as 54 on NIO. Otherwise, if it's gapping up, maybe it's gapping up to 52. Look for the dip buy at 50 and see if we can still get that move all the way up to 54. Then we'll readjust and see if we can consolidate for a bit, and then maybe make the next breakout higher on NIO. So that's NIO this week. And then lastly, we're looking to just go long on SQ over 220. So last week we were dip buying SQ at 220. That was a really nice trade. But now we're looking to go long on SQ if we can break 220. So that would be a move up here. And then if you want a nice little scalp early target, 222, 23. But I'm going to be targeting something about the 224, 225, and maybe as high as 228 this week on SQ. So that concludes this week's game plan. We'll be nimble and we'll be adjusting pre-market. Maybe there's some news Monday, but we're going to be nimble and we're going to trade whatever gives us the best opportunity. Be sure to catch us at Weenie Trades Live if you want to see these trades executed live, and we can make some really good money and maximize our upside and minimize our downside. Alrighty, be sure to like and subscribe and share it to all your friends if they're looking for some stocks to trade. Not financial advice. This is just what I'm doing. This is my preparation. This is what I'm looking to do into the coming week. Alrighty, thanks for tuning in. See ya.